can you gift properties during your lifetime to reduce the amount that you pass on when you die? Is that one of the strategies that you can use, or what would some of the strategies that maybe like an estate planning attorney would implement? And maybe that's a different conversation with them, but it would probably be wise for them to if they're in that limit of the $5 to $10 million estate, it would probably be wise to talk to their attorney, right?
Right. And like you mentioned, gift taxes, and that was something I was going to bring up too, was right now the estate tax and the gift tax are coupled to each other. So you get $11.7 million to give away while you're alive or when you pass away.
Okay.
So theoretically, I could give my assets away now, get down to zero, and pass that on. And that might not be a bad idea if I'm going to pass on real estate and appreciating asset. If I can give it to my children now and it's worth $2 million, but in 20 years from now it's going to be worth $4 million, I only get dinged on my estate and gift tax limitation for $2 million. So right now those two numbers are coupled to each other, so they're the same. Part of this proposal for the change in estate tax is to potentially break that limitation. And that the one proposal that's probably the more likely one that's being pushed is to have a $3.5 million estate tax, but only a $1 million gift tax. So I can only give away $1 million worth of assets while I'm alive, and then pass on that remaining $2.5 million when I pass away. So breaking that can change estate tax planning also, because like you brought up right now, you could give away assets now and kind of take away some of this and eliminate that future appreciation. But if they are able to break those limits, that will eliminate one of those estate planning techniques to get rid of assets while somebody is still alive.
So a good conversation for our viewers would be to talk to your estate planning attorney, and maybe the strategy that you guys have in place right now may change completely, and you guys may have to make some changes. But what Andrew's talking about is that if you think like the asset's going to continue to appreciate, why wait until it appreciates 400, a million, $3 million more if things like this could potentially change? So there's actions that the consumers can take. Our job is just to make you guys aware of them and then kind of guide you to the right professionals. You're right. A very common strategy is people keep exchanging. Then they pass away. They give it to their heirs. The inheritance tax is so high right now that it doesn't affect most people. But if that gets dropped, it might affect a little bit more people. And now there's inheritance tax. So a lot of times the estates are asset rich but cash poor, so they would have to sell some of the assets in order to be able to pay those taxes. Otherwise, they won't have the liquid cash to be able to do so. So it would potentially prohibit families that want to pass assets on to their kids from their kids actually being able to enjoy those assets and may be forced to sell them. So it would eliminate assets that are being held in the family for generations after generations. It would reduce the chances of that happening, unless you can tax plan, save up enough cash to pay for that inheritance tax, or even pay for the other tax as well.